this out. This is what's crazy. In the last 21 years, we've watched the stock market indexes fall by 50% twice. To sit there and tell me this can't happen again. But at the same time, there's opportunities everywhere. So first off, I think we're in a massive cycle. I think that we are on 2017 on steroids, which means that the blow off top will be huge. And the reason
Well, hello, everyone, and welcome back to Risk. I'm Lee, and I have a great guest today, Mr. Economic Ninja, an old friend. How are you doing?
I'm good. How are you doing?
I'm doing great. So, we're at the tail end of a very interesting year, and I'm welcoming you on here to tell us what your outlook for 2022 is. I mean, please don't be too pessimistic.
Actually, it's funny. I am pessimistic, but I'm also very positive. But let's, if you don't mind, Lee, you just said the key thing. We had a very interesting year, and to say it was interesting is, oh my gosh. I mean, we are printing money at insane levels. People don't, the truth is a lie. The lie is a truth. It seems like you can't get real good reporting anywhere now because things are being just totally just held back or suppressed. I mean, it is crazy. I mean, people are at peak craziness right now. I don't even know how worse it could get, but at the same time, there's opportunities everywhere. And my YouTube channel is one example of that. And other people's like yourselves that are you and Wall Street Silver and my friend Chris at Financial Fitness, all these channels that are popping up because people have a voice and they want to start sharing what they've learned their entire life, and they want to start spreading the truth. And so before I answer that question, I want to say I'm super pumped to be on your channel because yes, you were the first person with Wall Street Silver. You guys interviewed me and it was super cool. And so I'm super excited to be on your channel here. So thank you for that.
Welcome to the channel. I'm super pumped to have you on because I've always enjoyed talking to you.
Thanks, man. Okay, so
2020. By the way, the level of craziness in New York is probably a tad higher than where you are.
Oh, you want me to one up this? I live in California.
You're in California? I thought, okay.
Yeah, I'm right between LA and San Francisco.
Forget it. Yeah.
I'm mid crazy, baby. Dude, but you know what? You've got to laugh about that. And it really does make you think. In 2008, I'd been preparing for that event for a couple of years, selling all our homes, closing up our businesses and getting ready. And I was sort of ready for that one. And to watch people lose their minds when they were losing their jobs, losing their homes. And these are people that I had already warned that thought I was nuts, right? But it was like they'd never heard the warnings when it happened. And right now we have alarm bells going off all around the world right now. This isn't a Turkey situation where one country's going out, or Greece or Cyprus, Venezuela. These are all currencies worldwide that are literally collapsing. And it sounds funny. People keep telling me, and I'm sorry, I'm going off on tangent, but someone said the other day, hey, the US index is still pretty solid. And I'm like, it doesn't matter. They're all going down because everything's costing more.
Exactly. Including stocks. I mean, people don't realize that if you adjust it for inflation, it's...
Well, and when you take into account that a lot of stocks are down almost 20%, right, over the last year and a half, and really you only have a basket of stocks that are keeping the entire thing afloat right now.
The breadth of the markets has just been terrible.
Yeah, insane. And so for people to keep diving into these stocks, I mean, I look at AMC and GameStop and these short squeeze plays, and you're just like, yeah, that's great and all. They keep blowing up in price, but can that business model, is it sustaining that valuation? I don't think it is. So I think we're in that tulip phase. So do you want to talk about 2022?
Yeah, please do. Let's get into it.
So first off, I think it's going to be the greatest opportunity of our lifetimes. I do personally believe, not a financial analyst, obviously. I can barely tie my shoes and add at the same time. But I do believe we're headed for the mother of all stock corrections. And the reason why I believe that is because of the intense pressure that is being put on the stock market, because people are looking for safe havens and people are diving into the stocks. I believe we are in the late innings of the roaring 20s, fueled by massive money printing and manipulation. And manipulation is something that's very important here, because most people don't know what street name recognition is of stocks. They don't understand how the derivatives market works. And we have a collapse that has already started And it's shown through the repo market and how banks don't trust necessarily all the time just putting money out into the public, because they don't trust that that money could necessarily come back. So we see a lot of distrust on banks. And I believe that that is all imploding right now as we speak. So I believe that we're going to see that in the stock market. Personally, I believe I'd be shocked if we made it to Q3 of next year without seeing a good, 10 to 15, possibly 20% correction. And I mean that as like a first wave down. And that's where I think we're going to be in 2022.
I could see us softening in the markets come first quarter next year and just kind of going into like a slow bear and then have some sort of massive sell-off in the fall. I mean, that's kind of how I see what could play out. But,
the fall is historically the time where we see these massive corrections. I think the .com happened in the spring, which was, but normally they are fall. One thing that blows me away is that Q1 numbers are about to come out, and I have a feeling the retail sales are going to be abysmal. I don't think that it's all there. I know a lot of people that held off on buying things because honestly, things are getting so expensive. I see subscription-based services they're backing off their numbers. We saw that in Q3. And I believe that we're going to see it even accelerated more in Q4 because that's the low-hanging fruit on anybody's budget. Your YouTube account or your Pandora account, things like that, Netflix, they start to get hit. And I think that is a sign of what's coming, something larger.
Well, the whole economic situation has changed so dramatically for so much of the people who around the world, actually. It's not even just the States, but people have lost their jobs. Think about all the people who are renting.
Yeah, and it blows me away. I'm seeing how many people right now are I see news stories about employment being solid. These numbers are great. And I'm going, are you kidding me? Everywhere I go to the restaurants I always hung out at, they don't have enough wait staff. They're at limited hours. I mean, what's happening, like with John Williams' shadow stats, you're seeing there's a manipulation of metrics like the consumer price index, things like that. Real metrics that used to be used in the 80s are being completely torn apart and changed so that you can't see what's really going on. I mean, there's going to be a lot of mom and pop shops are going to close, sadly, because of things like minimum wage raising. I mean, there's all kinds of things changing, like in California. I mean, we're putting on our tinfoil hats now because we're all crazy.
From a conspiracy level, you look at what's been done to the economy over the past 20 years, and less and less mom and pops out there in every sector. And, I think that's a confluence of just the way our financial system's set up with the Federal Reserve and how the large and powerful can get financing that the small mom and pops cannot. So, there's been so much consolidation and that's just accelerated. And then, obviously the whole thing with the retail apocalypse, which started long before COVID. And then COVID hit, and I don't know about if you've been into LA or San Francisco or any of those cities lately, but New York City is just insane.
It's horrendous. I mean, I don't even want to say it out loud. Some of the things you see, even in my hometown now, what people do on the streets, it's just absolutely horrendous. And it reminds me of Rome. And if you think about it, I remember seeing some art that was developed by artists in Rome during the heyday, and it was depicting young people sitting at the city steps, feeding each other grapes. And I was intensely looking at this painting, and the person that worked at the museum was explaining to you, do you know what that means? And I go, no. And she said, it was that they had so much money. They were so flush with cash, and their system was giving everybody money that they didn't have to work. They just sat and ate and did nothing. And that's why the artist put them at the city steps, at the city hall. And remember, it didn't fall or fail until they couldn't feed their soldiers. And that's what we need to be looking for. And that's what I think is very important, because it happens to societies all throughout history, is everything collapses when they can't maintain their police force. We're already seeing that on just a domestic level, police forces being defunded and stuff. And I don't think it's necessarily, I get there's a backstory behind it, but I know that it's not necessarily we want to get rid of them. It's that I don't think we have enough money. I mean, the retirement situation here in California, how much they pay out. CalPERS is the largest in the nation. And what's sad is they have to literally sell some of their stock right now just to pay their current beneficiaries. I mean, we are literally watching this collapse in real time.
Well, let's talk about the demographics here. I mean, we have the whole baby boom generation, and they're exiting the workforce right now, and that's a huge swell of people feeding money into that system. The pensioners, they're all going to go bankrupt.
Check this out. This is what's crazy. In the last 21 years, we've watched the stock market indexes fall by 50% twice. To sit there and tell me this can't happen again, and you watch a chart of the Dow, and it went up, and then it dropped by 50%. Then went up, barely past its last high, fell 50%. Now it's up here. And I show that chart to people all the time and said, you tell me how this time it's different. And they just, well, it is. And I'm like, yeah, it is different. It's way worse. And it's going to fall much harder. And the sad thing is about the pensioners, and I feel for them, because I remember in 2007, I knew we were at the top of the market, but I still bought a house. And people ask me that all the time, like, why would you buy a house if you knew it was at the top? And I said, because I got to live somewhere.
Yeah, you got to live. Exactly.
Yeah. And so my payment was the same, or it was a little less than rent. So I bought a house. I knew I was at the top. My house lost 50% of its value. My neighbors across the street had just retired. They have their own company, a 401k. They were successful contractors. They just retired with a couple million in the bank. By 2010, half of that was gone, and they both had to go back to work. They went from being business owners to being a secretary and a janitor at our local high school.
Oh, how sad is that?
You want to hear what's even worse? They just retired again. And now they just retired for the second time. And they're sitting there saying the exact same thing. We've got the money in the bank. They still don't own their house. That was what blows me away. And life is good, and it's just about to cross again. And a lot of people are going to have to leave retirement and go back to work, because between losing your pension and the inflation explosion, which it's going to get worse. I've been talking about deflation lately. And if you want to talk about that, because I believe we're already starting to see deflation, people don't get that you have both at the same time. But between, losing your pension value and inflation, they're going to have to go back to work.
Unless they have a lot of precious metals.
Well, that's the other problem, though. If we think about it, the values of our investments and our safe havens don't always act the way we want them to, right? And let's give 2008 as an example, because I've said this a lot of times, especially with mining companies, how I say there is going to be a correction in mining shares because of stocks. Right. Well, the paper price of gold and silver get hammered down.
No doubt about that. Yep.
Yeah. And we saw that in 2008. We saw silver hit from, I want to say 19 to 11, maybe it was less, maybe it was 9, the paper price. And yeah, I couldn't go into a coin store and buy a silver eagle for less than $20. But when you go to sell yours, you have a lot of those dealers, they play with you and they'll go, well, spot's this much. Well, like, I don't care. I know how much you're selling it for. And so it's almost like there's never a good time to sell, let's say, precious metals until it blows way past what you paid for it. And that's the other thing I want people to realize. This is a war. The powers that be do not want to see the value of gold and silver increase exponentially, because it makes their currency look like crap. And what they're scared of, it already looks like crap to you and me. The point is, they don't want it to look bad in front of the general public.
Yep. It's all comes down to the mass psychology. Once it turns, the game is completely over. And you were mentioning the pensioners and everything, and you mentioned calipers before. Just imagine what will happen to that fund with unfunded liabilities if the market does correct that as dramatically as we expect it to.
Yeah. So in I want to say 2017 or 2018, don't quote me on this, CalPERS had to sell their Philip Morris stock. And it was really interesting because I was reading their quarterly reports. And at that time, when they sold it, that money went to pay current beneficiaries. They had to liquidate because in 2016, we'd seen a market slump and we'd seen gold increase in value. They spun it and they said, CalPERS does not want to be seen in front of the little children as investing in tobacco. I'm like, cool. The first time I see a young Michael J. Fox with a Wall Street Journal going, I cannot believe this. It's like, come on, this is total crap. But what's sad is that the public believes it and they don't see that they don't have enough. This is a total Ponzi scheme now. And the problem is, and we're already seeing CalPERS has already failed. About 2 or 3 times in the last 20 years, you have seen reduced benefits. For anyone starting on this date and forward, you now have to pay double as much and you get half the benefits. That's the sign that it's collapsing. So that's what's really, really scary. And what really blows me away is that people that are under CalPERS, and I know a lot of them, they don't even understand or realize what happened to United Airlines and Delta Airlines in 2006. They lost their retirements.
I think the same thing happened to Pan American years ago.
Yeah, if it was around 2006, I remember 3 or 4 airlines were all attached to the same pension, and the courts agreed it was allowed, that they were allowed to completely change their contract with their employees and take away their retirement or their pension. And you know what's funny? I was on a plane just the other day coming back from Miami, and there was a pilot there just reading through stuff, and I could see it on YouTube, and he's scrolling through people I know, and I'm like, oh yeah, you watch YouTube? And he goes, yeah, looking at finance stuff. And he brought up the pension stuff. He hadn't looked at me, and I go by on his screen, and I'm like, man, that's a good looking dude. And he looks over, like, holy cow. But it was a funny story because he goes, so yeah, we lost our pension. He's still flying. I should not be flying. I don't remember what his age was. He's I should be retired. But I got wiped out in 06. And that's what people need to know about, because if you're planning and you have something off to the side, you have cryptocurrencies, precious metals, you have no debt or very little debt, right? And you're working to pay it off, you're going to have so many opportunities when this thing goes down. I mean, you could buy houses so cheap in 2010 in California. It was like they were giving them away. And I want that for my subscribers. I know that's what you want. You want to prepare people, and this should be a party. I mean, because not everyone's going to listen. All right. So we might as well buy all their stuff.
Robert Kiyosaki always says that he loves the bear markets because he can pick up stuff so cheap. So have you had a chance to catch any David Morgan's work on crypto and Tether?
Yeah. So he called me a couple of weeks back. He goes, hey, just so you know, this is what I'm doing. And I'm like, well, do it. I think it's great. It needs to be said. And the sad thing is right now, Tether is so widely used. It's like that necessary evil. And so I don't know a ton about the backside. Do I trust it? No. There needs to be, that's so tough. It's so tough because I've never done a code audit on it, and I don't know anybody that has. So that's the thing. It's a very centralized setup. So no, I do know he's been talking about a lot. So but it's just one of those things. I'm like, I only go in and out of Tether. I choose other stable coins as my decision. But yeah, it could be a wave and I think there's a lot of conspiracy theory behind it, actually, that's being put out on purpose to almost lead people away from other things too, because I believe that there are big boys that are trying to buy up as much crypto as they can. And I'm going to be honest with you. I think Bitcoin's going to multi-millions of dollars. And I'm going to be honest with you. No one is going to own any, because humans are inherently greedy. And right now there is a money printing machine out there that is trying to buy it all up so that they can control it. And they could care less if it goes to 10 million if they own most of it, and to the few people that hold one, like I said, I'll always hold one until 10 million. I'll keep one until 10 million. And as like a symbolic thing, but at a certain point, you got to buy a house. You got to buy, people are going to want to buy their Lambos and their yachts and all that stuff.
So you're really still bullish on crypto, and you have faith that it's still going higher.
I do. And this is why. So first off, I think we're in a massive cycle. I think that we are on 2017 on steroids, which means that the blow off top will be huge. And the reason why I believe it's going to be well over 100,000 is because I'm just listening to the big boys. JP Morgan says 220. Guggenheim says 400,000. Right. All these big boys are coming out and saying, this is how much it's going to be. They don't like to be wrong. They don't become big by being wrong. And I believe that the sheer number, the institutional numbers that are going to shove in there, it's going to be insane. And now that we have the ETFs, there's just even more buying pressure. If you think about this, in 2017, and I don't have a chart in front of me, Bitcoin did a run in mid-October, I think 6,000, to where it topped out end of December at 19.5, 19.7. But the last part of that, from 14 to 19.7, happened within like a week. It happened so fast, and then it drops so fast. And this heartbeat is going to continue, and it's going to continue getting bigger and spread out until we plateau, when we have so much buy-in. So there is definitely, for me, a time where I'm going to start taking profits.
Are you in just Bitcoin, or are you in other altcoins?
No, I actually use the term Bitcoin synonymously. I use it with a myriad of investments I'm in. I have the least amount of Bitcoin as opposed to everything else that I have. So I have all kinds of different things. I'm really into, ironically, Digibyte and XRP, which are absolute polar opposites of each other when it comes to centralization or decentralization, things like that. But that's why I have both, because there are groups that want to use XRP. There are groups that want people that want to use Digibyte, for a totally different, reason, for like a security token, something to hold on to your personal information and secure it.
Do you have any other favorites that you would recommend people look at?
Me, I don't even want to ever recommend. And I've been really quiet, to be honest with you. I only said those two because those are my largest holdings. These things are so volatile. But I will tell you,
I won't hold you to any of these because I know what like.
Yeah, I did an interview with Reggie Middleton the other day, the creator of Veritasium. And that is a very interesting thing, because Veritasium was the first that I know of crypto token to be attacked by the SEC. And I I put my money into it. I bought it because it was a licensing fee for a software, a very important piece of software. Just like you have to buy a licensing fee for QuickBooks, Microsoft Office, all that stuff. I bought this because the license is for running the stock market and he just was given the patent for DeFi in the United States and in Japan. Okay. He owns the patent. He applied for that in 2013. And what's blowing my mind is nobody has any clue. Everyone's investing in all these things, Unify, Ethereum, all this stuff, and they don't realize they're all infringing on one patent now. Wow. And so that's something I'm watching, but you can't even buy it right now because it was so snuffed from the regulators. But there is only about 2 million of those floating around now that could ever be used for this.
So you can't buy it in any exchanges, basically.
You could buy it in two. It's very, very difficult right now. That's what I mean. There's a war going on, and this war is intense. And the SEC movement didn't come into effect until Jamaica signed an agreement with Veritasium to run their stock exchange. It literally keeps every transaction recorded on the blockchain, and you can only imagine how regulators felt about that, because then you can't have a dark pool.
Yeah, true.
So this is intense, and to watch the U.S. government issue a patent after what happened with the SEC, man, things are getting really exciting. I'm going to be honest with you.
Yeah, no, it definitely will be an interesting year for crypto. Over the next 6 months should be especially interesting.
Yeah.
So, we were talking about inflation and deflation. Obviously, you see a massive inflation in crypto prices. Where are you seeing deflation?
So first off, I want to tell you again, it's a spike. I don't think it's going to last very long in crypto. So I think it's around the same time frame as the stock market, what we were talking about earlier, going up and going down. You're talking about my time frame in deflation?
No, just how you are seeing deflation right now.
So I'm already seeing deflation, and that's it's very hard for people to understand. And I'll go back to 2006. As everybody bought their SUVs in 2004 and 2005, and they were balling, and they had their dubs, their spinners, and everyone's just crushing it. They're pulling out equity out of their homes, and that's where it's all going, right? I remember walking from cigarette boat to cigarette boat in Lake Havasu one day and asking all the boat owners if they own their boat, and I only found one that said yes. And then I asked him a few more questions, found out it was from a home equity line. And he goes, "Oh, well, if you consider that, then no, I don't own the boat." I mean, true story. These guys are all blowing out, $500,000 boats. And I'm just like going from each one, and asking these questions. And that's what drove that bubble up, right? Well, what we started to see is, even though valuations in vehicles were going up and things like that, we started to see deflation. Travel and leisure took a massive hit at first in 2006. And I started to see that start to slow down. I started to see people fixing up their homes instead of selling their homes and upgrading. And that's the sign at the end of a real estate market. If people are fixing up their home, because you usually ask them, "Why are you doing that?" Like, "I can't afford to go anywhere else, so I might as well fix this one up." That's that end of that cycle. So we started to see things deflate. Travel and leisure subscriptions, which weren't around as much as they are today. Subscription-based things are a really neat metric.
We actually had real magazine subscriptions back then. So.
There you go. Yeah, and the thing is that unless you're really watching, Newsweek's quarterly earnings, it's hard to really pick up on those numbers, right? But today I can just Google Netflix subscriptions and find tons of news stories about them where people are going through, because that's a really good indicator of the strength of an economy. That is the epitome of disposable income. So what I think, we're already seeing that. We're already seeing Disney numbers not hitting their marks. We're seeing Netflix slowing. We're seeing Zillow and Redfin already coming out with their forecast saying, whoa, get ready, we're going to cool. We're already seeing cooling. Shoot, we're already seeing Zillow getting totally just worked over with their home selling business, right? Mm-hmm. And so because people just don't have that much money, even though BlackRock's got a big checkbook, that checkbook's not going to be around forever because that checkbook is fueled by pensions and by government stimulus, right? So that's going to change one of these days. And so what I try and explain to people is we're already seeing deflation. It just doesn't turn off one day and we go, inflation's on, let's turn it off and turn on deflation. It doesn't happen. What happens is it starts in discretionary spending. And as that starts to get pulled back, that's when you start to see it, travel and leisure subscriptions. Then the bigger one, vehicle purchases. What kind of purchases are people? Are they downgrading or are they upgrading? More than likely, they're going to start downgrading. The only reason you can't see that is because of the shortage right now, but that's going to change. It's going to be an absolutely amazing change because companies are ramping up chip production and you're going to see a flood of cars hitting in the springtime, I believe. And as a matter of fact, it's not, I believe, it was already announced by 3 large auto manufacturers about 3 weeks ago that they're already believing that they're going to blow out numbers next year in quarter 2. So that's what happens. Inflation starts to wane because of the bidding wars. All right. The easy kind of inflation to take care of. The problem is we're also seeing food inflation and things like that because
Travis, you're talking about this and we had spoken to Jim Rogers on Wall Street Silver many times, actually a couple times, but it was a while back. And one of the things he said is the best cure for inflation is inflation, and the best cure for deflation is deflation. And you're explaining that perfectly right now. Yeah, totally. Because as prices get super low, people start buying them up. They got extra cash in their pocket. All right, cool, I'll hit it. The problem is people are always trying to hit that top or that bottom, and it's absolutely impossible to drive you nuts. That's why layering into an investment and taking profits on the way up, equally is the best way to go about it. And that's why I think people need to stop. Like I have people calling me all the time saying, you said the real estate market's going to crash. I should sell my house. I'm like, what the heck what would you do that for? It's like, and what you're doing is I'm like, you're greedy. No, I'm not. I want to save my families. I'm like, no, you're greedy because you have to live somewhere. You're trying to take the most amount of money out of your house and then speculate, and that's going to burn you bad. And so that's why baby steps is the best way when it comes to dealing with these kind of changing markets. Well, you sound very diversified in terms of investments. What's your risk management strategy for your finances? Do you have anything? Do you have like any thresholds that you look at? Call my wife out here. Yeah. So I learned the hard way. I lost my fortune 3 times, and my fortune wasn't big. But my point being is that I lost it all. I built up a bunch of money, I speculated, and I lost it. So my first off with risk management, as I have, like when people are starting out learning about how to become wealthy, and they have the envelope system. You only have a certain amount of money in each envelope, and each envelope is for a certain thing. Well, I do that with investments. But my biggest success, and I learned it through cryptocurrency, is I call it like the 5 bags principle, where I had 5 bags. One had precious metals, one had crypto. And in that crypto one, I had a couple different ones, right? A couple different cryptos. And then I had real estate and a couple other little things. And then I always have cash. One bag should be cash. You always need dry powder for an emergency or an opportunity. And I believe that's literally 2 words, same thing. So as one just explodes in value, you believe in all of them, but they're not all going to react the way you want at the same time. So take the profits off of one and then fill up your other bags. Because then as the cycle, and it's a human emotion cycle, that's all this is. All money going up and down is human emotions. Then one explodes up. Now you fill it up. And what happened, I learned it with crypto, and my holdings became huge because one would just take off. And my rule, it sounds funny in crypto, if a crypto went up over 20% in one day, I'd pull off the profit. And in cryptocurrency, you see that a lot. And so you'd have a handful, and as one just blew up, I'd pull all the profit off and dump them in between the other ones. And they would just keep going up and up and up. And so I do that with my exposure to other assets as well. So a lot of people right now are way too heavily involved in the stock market. But the reason why is it's a habit of nature because you're sort of ingrained to keep putting money in the stock market because you're getting tax incentives. And what I try and explain to people is, sometimes those tax incentives
aren't worth the risk when you have like $1 million in a 401k, but you've got like $2,000 in crypto, $2,000 in silver. And you're like, all right, well, if that takes a 50% hit, then what's going to happen to the other two? What's going to happen to you? So you're just way too out there. That's my suggestion.
What asset classes are you invested in besides crypto and real estate? And it sounds like
I have stocks, but my stocks are mostly mining stocks right now because, again, I'm invested in the things nobody wants to be a part of right now. Gold and silver have done well on a percentage basis in this inflationary environment. However, they've probably done the least impressive moves out of anything else. Well, that gets me excited. When other people go, that's crap, I'm going to go over here. Like, those people that are chasing those things, they only usually chase the top third move. And then they're usually ones holding as it starts to come down, and they're in total denial as it crashes. So my stocks are primarily in mining stocks because I want to leverage gold and silver. I've got precious metals, cryptocurrencies. My real estate's just my own home right now. I have nothing else right now because I have a feeling, we are at zero Fed funds rate pretty much. There's nowhere to go but up. I know they can move negative for a little bit of time, but that's only if we had a worldwide catastrophe because we're the reserve currency of the world. So it would look really bad if we just decided to go into negative territory and bring mortgage rates down. I believe that we are going to see a move similar, I think worse than what happened with Paul Volcker, and not because the Fed wants to. It's because the bond market's going to decide for them. And there won't be enough money to print to get them out of those high rates when it teeters and explodes. And the thing is that's when you want to buy real estate. You wanted to buy real estate. Everyone hails Volcker as a hero. Yeah. Nobody talks about what it did to real estate prices. It completely decimated them. And if you wanted to sell, you were stuck. No one was going to buy your house at that valuation after he spiked rates because they couldn't afford the mortgage on it. And so that's what gets me excited. So really, just those 4 asset classes right now. My baseball card, collection is really not worth that much anymore. I sold my Mickey Mantles.
I still have some baseball cards from when I was younger, but
I love them
forever, probably.
I love them. So yeah.
So is there anything that we haven't talked about that you think the viewers should know about for next year?
Pretty much ran my mouth off like crazy. The thing is that I really want to impress on people, because we could be totally wrong and nothing happened, right? But we know that we've never seen, in my lifetime, I haven't been old enough as an investor to experience real inflation like this. This is impressive. This is exciting because there's a lot of opportunities, but it shouldn't scare anybody. And it shouldn't cause people, like right now, home equity lines are being pulled out at record paces again. People are speculating. People are getting fearful. And it's that fear trade that causes us to go from inflation to hyperinflation real quick, because I've explained this before and people don't get this because they think that inflation is a mere change in the money supply, an increase or decrease, but it's actually 2 different ways. It's also a human emotion. And that's why Webster's and Oxford breaks it down into a monetary inflation or a emotional inflation, because people can drive prices up because they're afraid that they can't get it. It doesn't matter that they don't have extra money in their pocket. They'll just take more of their money and put it towards a good or a service. And
we saw that early days of COVID with paper towels and other things.
Yes. And what's sad is I used to talk about it. Toilet paper is the first thing that goes in a hyperinflation. And Venezuela is a great example of this because it is an emotional thing. It is the cheapest thing that you could grab. And it's like, you've just filled your arms and you've walked out of the store and said, I just did something for my future. And people don't realize that, yes, everybody needs to handle business. But, if you look at other things that you could have put your money to in those times too, like canned goods, things like that ahead of time. Me and my business partner, we sat in front of Costco on our tailgate of our truck and just sat there and grinned and looked at that line. And we said, it's going to get worse. And the sad thing is we are in the eye of the storm, and that started in the spring, even with lumber exploding. And I calmed a lot of people came out of my channel and I said, don't worry, lumber's going to crash. And it did. I even knew the month it would crash because of seasonal changes. Then I came out in October. I said, it's about to spike. And I got very little play. A couple people went out and bought huge lumber packages for their home. They said they saved thousands and thousands of dollars when I came out with that, because I saw the future start to correct and I saw the floods in Canada and stuff. I'm going, okay, we're going to see this again. And now you see the prices going up in the store. The inventory is all there, but the public has not figured it out yet. And so the biggest thing is don't be afraid. Just prepare in little pockets. And it will be, if you have just a little, when this thing goes down, it'll be like you're the richest person in your town.
Yeah, that's some wise words. Is there anything else you think they should know?
No, I think we covered all. I just really appreciate you having me on the channel, man. I can't wait to see
great,
the channel.
Great to talk to you. Yeah. Well, have a very happy New Year, everyone. To a successful 2022. And once again, Ninja, thank you so much for joining us.
Absolutely.